Welcome back to Bazaar Morning Call. We begin the day with lots of news flow. So Dipan Mehta, director at Elixir Equities, is joining us now to talk about that. Dipan, hi, good morning and thanks for joining in. You know, my colleague Sudarshan was just a while back talking about some brokerages and some interesting notes that they've put out. What stood out for me is CLSA is initiating coverage on DMart, where they talk about a $500 billion addressable market that DMart has, and less than 5% of this is organized. So the scope is so large, right? But we've seen the ups and downs with this stock, Avenue Supermarts, that is. Your thoughts here?
Good morning, Sonia, and thank you for having me on your show. Yeah, I think the potential is there for everybody to see, and that's why it's attracting almost all the large players, like from Reliance to Amazon and some of the other quick commerce companies as well. But the issue is that, the base effect is coming into play for DMart, and I think investors are not completely in sync with their online strategy. And more purchases are going online, and it seems that DMart is perhaps losing out on market share over there. And most importantly, Sonia, the valuations, at I think 70, 80 times trading 12 months with a growth rate which can be at best around 10, 12% or so. I think the stock is a bit expensive at this point of time. And when you want to play the consumption theme, I think there are cheaper options, maybe even more high growth companies are there over there than DMart. So, while it's a steady performer, and you may not lose any capital in it, but in terms of outperformance and generating the returns, I'm not so sure.
Okay, all right. Hi, Dipan. Good morning and good to see you. When in the last 9 sessions, the Nifty Bank has failed to end the day in the green. I think that's good. Index is going to be in focus because it seems like at lower levels we are seeing some kind of buying. From the banking pack itself, what is your preference as of now?
Yeah, good morning, Nigel. I think stick with the market leaders, the likes of HDFC Bank, ICICI, to an extent, even Kotak Mahindra Bank. If you look at their valuations at this point of time, they are amongst the lowest that I've seen in many years, except when there was a crisis. So, and the growth rates are pretty much intact. It's just a matter of time before this tight liquidity condition is slightly eased, and the pressure which is there on deposits, that sort of kind of elevates. And then you will see net interest margin stabilizing. So very positive on the large cap banks, NBFCs. I heard that story on Bajaj Finance also. Excuse me. That also is looking pretty interesting, I think, from a valuation and a risk return profile point of view. So positive on all the larger banks, where I feel that earnings growth now will drive the stock price higher, and earnings can easily grow at 15 to 20% for these large companies.
Got that. Dipan, hi, good morning. So two areas. One is autos. Yesterday, Eicher and Maruti and all saw that big move. By the way, we'll play out some sound bites of Sajjan Jindal talking about the, their venture with MG Motors. And the Cybester is the name of the first sort of automobile they're going to introduce in the market. And apparently, source-based information, but it should be around the price tag should be around 50 lakhs. Just your thoughts on the space, the auto space. I mean, the one thing, of course, is what it does for the group, but the other thing is what it does for competition in the space. Your thoughts, Dipan?
Yeah, Prashant, good morning. I saw the car, and the first thought which came to my mind is, should I sell my auto shares and buy the car? It's a lovely looking car, and it's a green car, means in the sense that it is environmentally friendly. And, sports cars, really haven't found any space in the Indian automobile industry the way it has in the developed market. So I think niche products like these have a great potential going forward. But yes, I think automobile industry long-term prospects are fantastic, but look at the valuations, I think, and at some point of time, base effect will come into play for these companies. A lot of the supply-related problems have been solved, so we are seeing this kind of volume growth. So eventually, even the booking period is reducing for a lot of auto companies, and valuations are pretty much fair. So I just feel that it's better to wait and watch at this point of time. But one auto company which comes to mind is M&M. I think, I think that it's from a valuation perspective, it is one of the more attractive stocks. And their demand remains pretty much strong, and products still find a lot of excitement with consumers. And they also have a decent EV strategy in place, unlike Maruti, where we expect that something will be announced in the near future. So broadly neutral on auto shares, but generally positive on M&M. And competition is there in the auto industry, but the market also is steadily growing.
Now, let's just quickly run through some of the other big movers, right? And one name, Dipan, I think we've discussed this in the past, which I think you've liked, we've not discussed recently, is Praj Industries. Had a very large move yesterday. I think was about 10% higher. And, at about 520, the high was about 650 or so. Just your thoughts if you own it and if you have views on it.
Yeah, Prashant, disclosure that we and our clients have investment in Praj Industries, and we generally like the story. And there was a blip when there were some policy announcements around what can and cannot be used to convert to ethanol, and that sort of affected the order inflows, and it still lingers. But by and large, I think the long-term play in terms of green fuels is certainly going to drive Praj Industries, and they have just about scratched the surface when it comes to exports, which has got a huge potential. Domestically also, they are a very strong player, very strong market share, but the stock does trade at premium multiples, and last 2-3 quarters, I think it has been below its potential. And even the order flow has not picked up as per our expectations. So while the long-term prospects are great, I think short to medium term, we may have to see some earnings volatility, maybe softer performance. So keeping that in mind, we are not actually selling off the stock, but nor are we buying it. It's just remaining invested. And once we see a decent improvement in order flow, I think that could be a good entry point for Praj Industries.
Just your thoughts on Tata Chemicals, which sold off aggressively. Now, of course, it went up one way, right, from the 950 odd levels on the back of all that buzz that Tata Sons is going to list. And then, of course, there was that clarification that they'll do their best to avoid that outcome. Sharp cut, I think 8-9% lower. You think it'll completely retrace, and is there any sense in looking at the business, excluding this news flow?
Yeah, you're right, Prashant. I think a lot of excitement around Tata Sons listing, which caused a spike in the stock price. But now that's not going to happen, and especially after they have offloaded shares of TCS. Clearly, the management thinking is to keep Tata Sons private. So the shares which Tata Chemicals holds in Tata Sons will remain just flat. It'll remain. It won't get unlocked per se. And look at the quarterly numbers, last 2-3 quarters, even a year or so. Tata Chemical numbers have not been that exciting because it's a commodity business, and there are a lot of overseas subsidiaries where there are a lot of moving parts as well. There was some buzz that they would eventually become a specialty chemical player with focus on the chemicals which go into electric batteries. But it's a small portion of the business. The large business is still driven by soda ash, and there's quite a bit of earnings volatility because of price volatility in the end products. And valuations are not really attractive, so I would just pass for Tata Chemicals at this point of time.
Okay. I wanted your thoughts on how to approach a stock like TVS Motor now, because there is this announcement that has come through on the issue of bonus preference shares. They've also added 2 new independent directors on the board. There's Vijay Shankar as well as Shailesh Haribhakti. This stock has done exceptionally well, Dipan. It's doubled in the last 1 year. Do you see more upsides here?
First, the disclosure, Sonia, we and our clients are invested in TVS Motor, and I would say that's one of the best two-wheeler companies. And even in terms of returns and profitability, even better than our favorite Eicher Motors. But valuations, every time you look at a good business, you look at the valuations and you feel, no, at these prices, if I buy a TVS Motor or a stock trading at 40-50 P multiple, am I going to get a good return going forward? Sure, earnings are good, but they do not justify this kind of a P multiple. TVS Motor per se is a very well-managed company, aggressive when it comes to new product launches, and perhaps the only two-wheeler company which is present in all these segments of the two-wheeler space. And they have a decent export footprint as well. And EV strategy also is pretty decent. So it checks many of the boxes except the valuation box. So these are great stocks to buy when there's a correction. If it falls by 15, 20, 25% from its peak for whatever reason, maybe overall market correcting, then that's a good entry point. But on a rising market like this, where the stock has moved up as much as it has, I don't think you will make great returns from this point over the medium to long term.
As Dipan, this is a stock that has been hitting fresh 52-week highs. At this price, is the risk reward still favorable?
No, Sonia, I don't think so. I think end of the day, it's an industrial company and it's subject to cycles. Right now, of course, we are seeing a fantastic upcycle in capex, and that's really benefiting CG Power. And I would say it's one of the best turnaround stories of India. I would rate it as that. but a lot of the positives have been priced in. And I know that semiconductor foray has created some amount of excitement, but these are really long-term plans. And they are fraught with risk as well, technology, execution, and overall it could result in lowering of the return on capital ratios as well. So from that point of view and looking at the valuations, I'd just like to not at least make a fresh investment in CG Power, but existing investors, I think it's an easy choice to remain invested. There is a lot of momentum behind the stock, and certainly it could rally further from these levels, but risk return profile wise, I wouldn't advise buying into it.
Okay, all right. Thanks a lot, Dipan, for that.